Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, February the 22nd. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not a whole lot going on today, but we did get European final CPI. Consumer Price Index came in line with expectations at 1.8, was expected to be 1.8, and final core CPI came in line with expectations at 0.9%. We also got German business climate came in a little bit higher than expected at 111, was supposed to be 109. And then here in the United States, we have a couple Fed governors speaking. We also have the existing home sales came in at 5.69 million units, was expected to be 5.55 million units. So existing homes moving quite nicely. Could be due to the higher consumer sentiment. Consumers are starting to feel a little bit more confident. That is going to get them out there looking at houses. Also, we've got the Fed with a increasing interest rate policy. That should get people out there off their rockers and trying to lock in some low mortgages. So that isn't really a surprise in a sense, despite the fact that it was higher than expected. We also have Fed Governor Powell speaking later on this afternoon, and then this evening, or at about 2 o'clock Eastern, we get the FOMC minutes released. So I don't think that that's going to really stir the markets because we've seen a lot of these Fed governors speaking since the last FOMC. So all in all, I think that what we see in these minutes is kind of what they've been talking about. So I don't really see that as a huge market mover. We could see a little bit of nuances changed in their statement, but for the most part, I think that they've really conveyed what they're thinking already in some of these other speeches. So I don't think that that will be a major market mover. On to the overall markets. We've got crude oil coming off today, down about 80 some odd cents. Yesterday when we were talking, this market was up almost $1, and then since I did the video, it just completely started sliding for the most part. We kind of had a big bounce off of the early mornings, but this is right around when I started talking about oil, and the market completely just slid off overnight. Tried to make a valiant effort at a rally, but then just completely, as soon as we came in to midnight my time and about 2 o'clock in the morning Eastern, the market just completely fell out of bed and has been unabated for the most part until it got right down here to the value area, or where the most time, or actually the most volume, has been traded over the last 5 some odd days. So right to that point, which is what we look for in these kind of trades. Actually, a trader might want to put the trade on right here as soon as we come back into the value area and try and take advantage of about that dollar move there. Then on to gold futures. Gold down on the day, down about $5, but again, right there on the line in the sand. These two moving averages are touching. That is going to act as a major support there, especially because it's the 200-day. The bulls are going to try and fight to keep that above that line. Bears obviously want to settle below that line to take control of that market. Then with the bonds, we got the bonds down on the day just slightly, as we got a real mixed bag in the equities. Bonds trying to really decide what was going on. As a matter of fact, when I was preparing to start this, bonds were basically unchanged, but have slid into negative territory by about 10 ticks. So starting to, pick up a little pace to the downside there. With the Dow Jones Industrial Average down just slightly on the day by about a point, but a new intraday historical high today. As I'm sure the news, if you turned on any news, they were talking about historical highs yesterday. Then we have the NASDAQ up a little bit on the day. Could be due to Facebook is just up about $3 almost on the day. It could be the thing that's really supporting this, because the rut S&Ps were down not too long ago, but the NASDAQ up slightly on the day. So we have the E-mini S&Ps down on the day by about a point. This is what I'm talking about. Real mixed bag, kind of hard to discern what's going on. We've got crude oil down. We've got the NASDAQ up. The NASDAQ could really be pushed higher by Facebook, as it's up $2.50 right now. And then we have the rest of the broader markets down slightly. So E-mini S&Ps down on the day. This is the 15-minute breakdown on the E-mini S&Ps. Pretty much an inside day, despite the fact that we have this just outside here. The line usually should land within those, but pretty consolidated inside yesterday's range, with the market kind of coming off as soon as the bulls came out in strength right off the open, and then kind of gave up on the overall market. We could see a lighter volume day today as people wait for the FOMC, because they don't want to put anything on just ahead of that. Then on to some trades that I've done with U.S. Steel, ticker symbol X. Decided to put on a bearish put spread in there, and I'm going to add a little bit of short deltas in my overall portfolio, so this kind of fit the bill there. And I went into U.S. Steel and did the March 38.5 43 put spread in there, and paid a debit of $2.38. So right in line with my rules around this strategy. And I'm going to be going over these rules in a webinar on Friday and next Friday. I'm going to be covering some long put spreads. Great for these low implied volatility markets. It's about one of the few things that you can really put on to take advantage of expansion and volatility. Then we have Tesla here, which is going to be an earnings setup. I don't know if I'm actually going to do anything in Tesla, because it's actually only about a 43% IV. So I don't think I'm going to really be touching this one. It's got about a $16+ range. I usually like playing Tesla because it usually gets pretty high implied volatility. It allows me to get pretty far out there. But I'm just kind of going to probably sit on the sidelines for this. We have had about 90% of all of the earnings, even though there's a lot of earnings being released today or this afternoon and tomorrow morning, just not a lot of the ones that I like to trade. There's real wide bid ask. Some of them don't even have bids right next to the out of the money options. So I'm going to stay away from that. I'm probably not going to play around with Tesla, but it's having earnings, and you can try and take advantage of a little volatility crush, as would expect volatility to come out of this tomorrow. But again, like I said, I just don't know if I'm going to play it right now. This is the one that you actually just heard me get filled on this startup, or had it working. Just been kind of chasing this all day and decided I was getting a little bit anxious to trade this, but it started to have a pullback yesterday. It looks like, it was kind of topping out. Looks like it might want to go back down to the point of control. So I decided to put on a trade in Intel, which is ticker INTC, and went into the March again and did the 34.38 put spread in there and paid $2 for it. So it's 50% the width of the strikes, and paid for my extrinsic value on that trade by setting it up this way. And I'm going to talk about all of those rules again on Friday at the webinar. I don't have enough time to really go into the right environment, the right timing, and how to set this up to increase your probabilities of success. Do all of that on Friday. So go to protraderstrategies.com, sign up for that. If you can't take that, take it easy.